Hey everybody, welcome to the recap for the week. Doing this a little early for today because there's not really much happening on Friday anyway. So before I start, just want to let you guys know that we do have a stock earnings course tomorrow, April 23rd, and it's going to be pegged for Saturday at 11 a.m. Pacific time. So that's just add 3 hours if you're in Eastern time zone. All right, so um, it's typically an hour. There's nothing super complicated to kind of watch. We're not going to learn indicators or any sort of ridiculous patterns or anything like that. It's more so the technique that we actually apply. So you don't need to be a wizard to know in trading, but you just need to understand how to read a candlestick or something like that, and that should be just enough for you to kind of start with, and we'll go from there. So this was the one that actually won this week. We had a bunch of choices for people, but this is the one that they actually chose. So it's gonna go ahead. So if you're interested, definitely go to the website at www.equisense.com and click on just scroll down and it'll click on the link and you'll go from there. So everything is recorded and class notes are provided as well. And that will definitely help you there. So the entire week has been a very very interesting week with respect to the common events and the things that we've been looking at. So I mean we started off with Netflix earnings, which was not that great and kind of took of course stock down. The market as a whole largely ignored it, and then we had oil as well. So there was a lot of things that were kind of moving, and the one thing that was kind of probably central to the theme of this week was there's a lot of disconnect from correlated assets and all that stuff. So that made a lot of people kind of question what's going on with the market, and it's a very very fair thing to ask to or the question to ask as well. So it is what it is at this point. And then we concluded this week with Google. The ECB press conference and the rate decision was actually not as as volatile as expected, but largely today was driven by um, you know the market being close to highs, if not highs of the year, as well as of course Google. Everybody was expecting Google to actually outperform, and I think that was probably one of the reasons why Google kind of really were everything was kind of priced to perfection. And of course, we had a huge miss in Google, and it is where it is now. So at the end of the day, you gotta have to, you're gonna have to always evaluate the things that you hold because you never know if they report bad or report good, and could change your portfolio altogether. Okay, so with looking ahead to next week, we do have two central banks to look forward to, as well as more earnings with Apple and I think Chipotle, and if I'm not mistaken, Amazon. I haven't double checked my list here, but if it's not next week, then I know that's Apple and Chipotle that's confirmed for next week for sure. So something to look forward to if you're trading the earnings season. So until then, keep on checking your portfolios and make sure you're aware of the stocks that you have. And here's an advice. If you don't know the reason for why a stock is in your portfolio, most likely you should probably get rid of that stock. It's just that plain and simple. All right. So have a wonderful weekend. Thanks for your time, and I wish you the very best.